Hello traders, this is the midweek market focus of the 21st of May 2014. What I'm going to cover today is a bit of snipers, and it's going to be pretty basic, just so you know. How to use the e-signal, a few things here and there, and a few of the trades that I have taken myself, and a few of the trades that I'm looking at as well. I'm gonna give you a few advanced patterns as well. So then obviously for those of you who have been trading for a while, you can obviously learn something new. Or you've probably seen it yourself anyways. Right. So let's get started. Um, right, so basically I'm gonna show you a few of the snipers that we had today. These the Euro Japanese yen. Um, Euro Japanese yen gave a few snipers today. You can see the arrows here, so arrow pointing down. That was some news there, I believe. It's a huge move here. Another sniper there, and then obviously, um, what, you're not gonna sell on this huge bar like that. That triggers with huge bar like that. You're not gonna go into this bar, obviously. Just that by itself is like 30 pips, so we're gonna stay away from the big bars. Okay, you have to wait nicely until it kind of catches up towards the 50 MA, and then you just sell there. Make sure the everything is lined up nicely. So linear regression going down like that. That's exactly how it was when it triggered. Pushing down nicely, all right to sell. Pushing down nicely. Touches there. That's the entry on the 50 EMA itself, and you go 20 up and 20 down. Okay, and you got 20 up and 20 down for the entry and the stop loss. Fine. So if you're wondering how to put the linear regression up, you go right click on the 5 minute. Yeah, so it's right click basic studies, linear regression, and these are the settings. So you can pause it and get the settings right. I'm just gonna carry on myself. So these are the settings, there, 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 and there. Right. So you can pause it and then you do it on your one, and then you can just carry on. All right. Let me just go on to the pound versus dollar, which was placed as a trade alert on the Thursday evening. I placed it myself. It was a beautiful trade um, on the daily chart. Let's just okay. What we're going to do? We're going to do a bit of an exercise. So let's do an exercise. What I want you to do is to go on to the pound versus dollar daily chart. Okay, and nothing, no indicators. Just the 50 MA. Okay, just the 50 MA. This one here, the red one, and that's it. Nothing else. So the price action, yeah, the price going up and down, and the red line. That's it. Nothing else. Good. So what I want you to do is to have minimum, let's call it 8 months. So each of these columns are months. So it'd be like 1, 2, 3, 4, 5, 6, 8 months. Yeah, something like that. Just under a year. And what I want you to do is to analyze it. Okay. I want you to analyze it and put all the lines on it, support and resistance, channels, and so on. And then and then um, I'm gonna do it myself, and then you're gonna obviously see how accurate you got it yourself. Okay. So what you can do now is to pause it, go onto your charts, do the homework, and then see if it's matching up with my analysis. So again, what I want you to do is to put some trend lines up, support and resistance. So some support and resistance, and then some the trend lines as well. So the trend lines, which are the channels, okay, and then the support and resistance, and then you can put the phase one and phase two as well if you want, and that's it really. So it's all part of the technical analysis, and then see how accurate you're gonna get it. All right, I'm gonna do it myself, so it's a good exercise for you. So right, so by now you should have done it already. I'm gonna do it myself now. I'm gonna put a line here like that. By the way, it's this line here, the one that says extended. Draw the line nicely upwards like that. So you have one touch here, one touch there, one there, and there. Okay, and then you're gonna copy and paste it. Copy, paste it up here. So that's your channel, and then what you have to do is to put some support and resistance. Put a resistance. That's our level of resistance up here, which is breaking through, and it's becoming support. Okay, so that is resistance, breaking through, and becoming support. Not only that, but it's also bouncing off the 50 moving average there. So this is sitting on the 50 moving average as well, and it's overlapping nicely with the trend line going across like that as well. Now, so for those of you who all this is pretty basic and you're already trading it and so on, I'm gonna give you the fibs as well. Okay, so I'm gonna go from the previous swing low. Start from this one here, the previous swing low, this one here, the most recent swing low, to the most recent swing high. Stretch the lines. There we go. So that is giving you a Fibonacci retracement level on the 78.6, which is very, very powerful. And it's overlapping with the 50 MA, resistance becoming support, and the trend line, and it's above the 15-200. And for those of you who are using the RSI, I don't suggest you to use it if you haven't been trading for minimum 3, 4, 5 months. It's here. So it's giving you an oversold signal. So the price is oversold, which means that far too many sellers in the market, and now you need some buyers in the market, right? So see what happened when it was up here. When it was up here, it was overbought. Then you need some sellers in the market. Now down here is oversold. You need some buyers in the market, and so on. Okay. Not only that, but it's also giving convergence. So it's giving you RSI convergence to the upside, like that. So it's also giving you RSI convergence, which makes it even stronger. So this is proper quality trade. These are paper cow, and these are the ones you have to look for. Okay, hope all this is clear. The Fibonacci might not be clear, but don't worry about it. This is all a stepping stone process, so I'd rather have you focusing on the higher highs and higher lows, and the cycles and the phases and so on. So that's phase 1, phase 2, phase 1 and phase 2, phase 1 and phase 2, and so on. So I'd rather have you understanding all this, the high highs and the higher lows and the moving averages and the trend lines and so on, than jumping onto something far ahead and then obviously getting confused in the future, which is not good. So yeah, that's fine. Cool. So the pound versus dollar is on a 6-year high, and it has broken through retesting and is taking off again. So it's beautiful. Right. By the way, if you see that the 5 minutes pushing down, it's all part of the cycle, part of the swings. Because if you look on the 60 minutes, giving you phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. It's just part of the cycles, part of the nature of trading. So you breathe in and out, in and out. So that's part of the cycles, and even the 4-hourly chart as well has been just pushing up. But the one that is the most beautiful one of all is the daily chart. Okay, which is this one here. All right, cool. So this is how it should look. Just one more time. Should look like that. Okay. Cool. So you should get all the lines done, and then, by the way, the entry was on this day. So the entry was right-click tools, interval replay mode. So I went back to the Thursday night, and that was the entry was. So it was here. Entry here, and a stop was there. Entry and stop. And this is how I placed it on the as a thread alert on the management panel. So we go here, I was placed there. I've already sent another email out on how instructions on how to trail your stop loss. So now we're moving the stop loss, but only when the bar closes. Okay. So that was one there that was placed on the 15th. On the 15th of May was placed. Which was on this day, on the Thursday night. So entry a stop loss there, and on the next day got triggered in. Off it goes, and that's what we are now. Okay. So it's giving a great reward to risk ratio as well, especially if it pushes up all the way to the top. Be very nice. Cool. So that's one there. Now, for those of you who are more advanced and you'd like to see something quite interesting that is happening, this cat Swiss. If you go comma enter, this is the monthly chart, and it's hitting this level down here at the bottom. That's hitting a level there, hitting another level there. This monthly chart, cat Swiss. So it's hitting that level there. Ignore this section. That's the Bank of Swiss National Bank intervention. Here, so ignore that. That's fundamentally driven. We're not trading fundamentals. We're trading technical analysis, trading the patterns. So we go comma the enter. This is now the daily chart, and this gave a beautiful inverse head and shoulders. That's the shoulder. This is the head, and this is the other shoulder. And that's breaking through now the neckline, which goes across like that. And then this is likely to pull back down and then take off from there. So this is gonna give some nice entry here based on a higher highs and the higher lows. Okay. So you go like that, copy and paste like that. So this and this is likely to carry on for a while. Okay, to the upside. So yeah, that's something there you can look for and wait for. Okay, there is cat Swiss, fine. What else? Now if you go into the Aussie key, which is very similar, very similar pattern. We'll have to wait until the price break through this line here first. Once it breaks through and retest, then it's gonna start giving nice entries down here at the bottom. Okay. As it is now, we have to wait because now the market is ranging. It was going down for a very long time, and now seems to be ranging. So we have to wait until it breaks through those highs there, and then once it breaks through, pulls back, and then here, off it goes. Okay. So the cat Swiss is like here now. So all you have to do is to wait until it retraces. In fact, it's actually here. Sorry, it's actually already pulling back down. So the cat Swiss is like pulling back down already here on the daily chart. So this one he has to break through first, then retest, and then go. I'm gonna show you the cat Swiss so you can see the picture. See that? It's already pulling back down. So it's here. It's broken through the neckline, broken through, put a new high, high highs, high lows. So higher highs, higher lows. One until it pulls back, and by the EMAs, it's gonna match up nicely here with the moving averages there as well. Beautiful entry here. Wait for a price action, wait for a lotus bar, inside bar, doji bar, or a buyer bar. Yep. And it's gonna give you nice entries on income generators and so on. And then here as well. Fine. Okay, that's cool. So let's move on. Yeah, this is the Dow, which is looking very bullish. It's giving you the cycles here. There is the Dow Jones. Yep. High highs, high lows. Sitting on the 50 EMA. Similar to cable. Cable is very similar, but cable is already kicking off. So it's like very similar pattern. This one here. So yeah, that's fine. Let's see what else we have. Can look at a few stocks here and there. So we got HAS-LON. So this is this is going to the page for stocks. HAS-LON. So this Hayes place, and it's been giving entries here non-stop on power place, going up. That's your channel. Beautiful trend going up. Now it's retesting some levels here. Yep. So this is what it's doing. It's been giving a lot of entries here. Now it's the first time that it's broken through the 50 MA for a very long time. Okay, but it's retesting this level here, and by the look of things, it looks like it's already pushing up to the upside nicely, up to the top here. It's like a triple top formation. So there is something there. Let's see what he's giving us today. No entries to buy and to sell. Quite a few. Man group, nothing there. These cycles are very, very tight and small. Very tight and small, but it's giving you an entry here. So this will be the turning points. So these are the turning points here, pushing down. This could potentially be an entry there to sell. Okay, he was giving a lot of entries to buy here. The things that this is very aggressive, this move here, and it's better if you get like a high test bar. So you're gonna get a much tighter entry. You get like a high test bar, price action, and see what else we've got. Next one, Mark Spencer's, pretty flattish. There's nothing there. Next one. Downtrend, fine. You can wait for a pullback and look for selling opportunities. It's not ready just yet, but you can put it in your watch list and keep an eye on it. If you're looking to sell in this area here of the 20 moving average, you can take it as a 20 pounds there as well. Okay, so you can take it as a 20 pounds there as well. Because it's below 1,000, so it's below 10 pounds per share. That means that you're not gonna follow the indications for the entry for the stoppers and targets, so it'll be a bit smaller. So all you have to do is to put the lines first, analyze it, and then now you can easily go for a 70 pips move with a 40 pips stop. That will work out nicely here, even less, even like 35. So that'd be like a 2-to-1 reward risk ratio. So 35 pips stop loss and a 70 pips target. So that's like a 2-to-1 reward risk ratio. Excellent. Let's see what else we've got. Thomas Cook. It's too noisy. Nothing there. Next one. Blackbrooks. It's giving. It's been pushing down for a while. He's sitting right at the bottom here. And that's a triple bottom formation here. So we're not gonna be selling here, because if you sell here, you'll be selling against a concrete wall. So stay away from this. This is pretty aggressive. It's not good to sell against levels of support. Okay, level of support at the bottom. By the look of things, it's giving you a descending triangle. What normally happens is that it continues in the direction of the trend, which is down. So it's getting tighter and tighter, and as it pulls back, off it goes, pulls back, off it goes. It's getting tighter here. You're expecting a breakout, and then pulls back a bit, and then off it goes to the downside. So that's something there to look for. It's a descending triangle. So the lows are flat and the highs are getting lower. And that's it. There's nothing else on the for the selling opportunities. Let's have a look on the power plays. Going to the TU20 bounce. Let's put the 50 MA on. Now it's giving high highs and high lows. It closed above the 50 MA. This could be a good entry to buy it actually. It's Anglo American. So it's high highs and high lows. High highs. Well, this is more like a double bottom formation to be honest. But it closed above the high, so this could be a good entry actually. An entry here and a stop loss there to take it up to like somewhere here. Yeah, so that could be a good trade there to go for. The actual risk on the trade is so the full risk will be, let's call it 50 pips. That's a 1-to-1 reward risk, 2-to-1 reward risk, 3-to-1 reward risk, 4-to-1 reward risk, so it's not bad at all. If it kicks off to the upside like that, it's gonna give a 4-to-1 reward risk ratio, so that would do. And if you keep on taking them, you make money, guaranteed. Because when you lose 1%. When you get it right, you go for 4-to-1s. So even if you lose more trades, it doesn't matter. You can still make money. Okay. If it's not very clear, you can speak to your coach about it. Okay. So basically, on a 4-to-1 basis, even if you only win 2 or 3 out of 10, you still make money. Because when you lose 1%, and then when you win, you go for 4-to-1s, 5-to-1s, 7-to-1s, 3-to-1s, and so on. Okay. So it's not about winning more trades, it's about winning big and losing small. Well, losing 1%, but winning big. That's the whole idea. Let's see what else we have. Oh, look at that one. This one is kicking off already. So we put the lines on like that. So we copy and paste it. We put it up here. High highs and high lows. That came back down to here. That would have been a good entry here. Entry has stop loss there. And this is already kicking off to the upside. This is already gone. Don't jump on this. It's gone. Okay. You're not gonna get in here because if you get in here, what you gonna put a stop? The stop will have to go down here. So that'll be a huge risk. So it's not good. Okay. So make sure you look for quality over quantity and jumping when it's there at the bus stop, not when it's taking off. Okay, so make sure you get that right, and the execution is very important. Okay, execution, remember that. Right, this one is good, and high highs and high lows. That's giving a low test bar. See what the volume is like on this. 400,000, 460,000. So it's not bad. And copy and paste like that. Phase 1, phase 2, phase 1, phase 2, phase 1, phase 2. So yeah, this could be a nice enter to go for as well, with an entry here and a stop loss down there. Beautiful. Ashmore group. Entry and stop loss here, and you go for a 3, 4 to 1 there again. Okay, so have a look at this as well. So, once you know how to analyze the market, you can trade everything. Okay, once you know how to analyze, you can trade pretty much everything. Just need to remember that stocks is from 8 to 4:30, and you have to place your orders once the market is closed. And on Forex for daily chart is at night, then in the evening, for income generators and so on. And for example, for the US market, you have to wait for the US market to close. So that'll be 9 p.m. in the evening, London time. So you have to make sure that you get the times right and the execution right. And that's it really. Cool. And I'm gonna upload it now. It's already 10 past 6, so it'll be ready by 7 max. Right. I hope you guys learned a lot, and I'm looking forward to seeing you all soon. Have a good night, and I'll speak to you soon. Cheers there. Bye now.